You know, most investors are constantly chasing hot tips, and then they wonder why their portfolio just doesn't perform. The legendary investor Philip Fisher had a better way. He used 15 simple questions to quietly filter out the hype and find amazing companies that could grow for decades. In this explainer, we're going to walk through how you can use those very same questions before you even think about buying your next step.
It's a frustrating cycle, isn't it? Chasing the next big thing often means you're buying into the excitement right at the top and then selling when panic sets in. That is absolutely not a reliable path to building any kind of real long-term wealth.
So what's the answer? Well, it's not some secret stock tip. It's a durable, repeatable framework for thinking. It's about learning to ask the right questions. Questions that help you separate a genuine quality business from just a temporary, flashy story.
Okay, let's dive into the framework itself. Now, Philip Fisher's full list has 15 points, and at first glance, that can feel a little overwhelming. But here's the key. They all support 3 core pillars. Think of these as your main filters. If a company fails on even one of these, you just move on. It really simplifies the entire process.
The very first pillar is all about the size of the playing field, the business potential. See, Fisher wasn't interested in a company that could have one good year. He was looking for businesses with a market so big, it could support major growth for a decade, or maybe even more. Just this one filter alone weeds out most of the hype you see around niche products with a limited future.
And here's where you see that difference in action. A truly great company is never complacent. While its current product is selling well, its best people are already deep into developing the next wave of innovation. They're determined to create their own future growth, not just coast on past success.
And this visualizes the potential perfectly. Think about it. Even the most brilliant management team in the world can't create lasting growth if they're stuck in a small, saturated market. Fisher's questions force you to find companies that are playing in a vast and expanding field.
Now for the second pillar, and for Fisher, this one was completely non-negotiable: people and integrity. And this quote really says it all. For him, a brilliant business run by untrustworthy management was an automatic no. Integrity isn't some nice bonus feature. It is the entire foundation of the investment.
This is such a subtle but absolutely critical distinction. It's so easy for investors to get drawn in by a charismatic founder, but Fisher looked deeper. He looked for management depth. Is the company actively training and promoting its own people? A strong company is built to last, to outlive any single executive.
So this idea of integrity is what protects you from those scandal stocks, the ones that can just wipe out an investment overnight. But how do you actually figure that out from the outside? It's not like it's listed in the annual report. Well, stick with me because we are about to get to the brilliant, on-the-ground technique Fisher invented to get the real story.
Our final pillar is what you might call the company's financial moat. And this isn't just about being profitable today. It's about having a durable, real competitive advantage that allows the company to defend and maybe even expand its profit margins over time. A high margin is a huge sign of pricing power and excellent operations.
And you can see this long-term mindset in how a company reinvests its profits. Instead of just hoarding cash or spending a turn on perks, it funnels that capital right back into research, sales, and production, all to make its moat even wider for the future. Okay, so we have our 3 pillars: business potential, people and integrity, and a strong financial moat. But that brings up a really big question, right? How do we actually find the answers to these things? Well, this brings us to Fisher's secret weapon, a method he famously called scuttlebutt.
I mean, let's be real. Management is always going to paint the rosiest picture possible. In financial statements, they only tell you where a company has been, not necessarily where it's going. Fisher knew to find the real truth, he had to go beyond the official story.
Scuttlebutt is really the art of investigative investing. It's about talking to the people who interact with the company every single day. These sources, the customers, the rivals, the suppliers, they have a real-world vested interest in knowing the company's true strengths and weaknesses.
And Fisher broke it down into a simple, actionable process. First, you talk to the customers. Are they actually happy with the product? Second, you talk to competitors. A truly great company is usually respected, maybe even a little feared by its rivals. And third, you talk to suppliers. They know exactly who's growing and who's reliable.
Now this is one of Fisher's most brilliant questions. Just listen to the power of that final word, yet. It's incredible. It cuts right to the heart of innovation, of forward thinking. A company that is obsessed with answering that question is a company that will never, ever be complacent.
You know, when you really adopt this framework, something fundamental starts to shift. You stop thinking like a stock picker, someone who just follows price charts, and you start thinking like a business owner. And that right there is the ultimate edge. A speculator just rents a stock, right? They're hoping the price goes up, focused on the ticker symbol. But an investor, using Fisher's method, they're buying a piece of an actual business. Their focus is on the quality of the company, its people, and its real potential to create value over the long haul.
So the key takeaway here is that Fisher's questions are an incredibly powerful filter. They offer both safety on the downside and huge potential on the upside. They protect you from the hype and the scandal stocks that can blow up, and they help you identify those rare, uncommon businesses that are capable of growing quietly for decades to come. And this is the final question, the one you should ask yourself before any investment you make. Because your answer is what separates the noise from the signal, and what separates short-term speculation from true long-term ownership.